Brian Mallory doing a market wrap-up for July 10th, 2010. The wrap-up is actually for the action that we saw yesterday, but just now getting around to it here Saturday afternoon. In any case, I'm also going to want to look back at the week we just had, and also try to look at where do we go from here in the week before us. So quite a bit of stuff to cover. I also have some charts that I want to go over with you, and these videos are actually something that I had done in the past. It's probably been about 6 months since I last did one, but I know they were pretty popular. I always got positive feedback on them, and I'm going to start doing these again on a regular basis. So hopefully you guys like them, and that you're able to get something out of them that you might not normally get out of a snapshot of the typical kind of posts that I put on shareplanner.com. So let's go ahead and take a look at the S&P 500. I've drawn a few lines here. I've got moving averages on all the charts of 50 and 200, but this is a long-term view of the S&P. And if you look right here at the peak of the rally back in 2007, you have a nice downtrend in place from where we peaked in April of this year. And zooming in, well, let me back up here. If you look here where the peak of April 2010 was, you can see we started selling off as we hit some major resistance overhead at us. And when I say major resistance, I mean look at these points here, look at this point here, and then you got a whole bunch of resistance here and here. So obviously there's a lot of pressure for the bulls to be able to bust through that particular price area. So foreseeable future, I think that we're not going up, we're going down. And if you've been reading the blog for any length of time, you know that I've been quite bullish on this market, quite bearish on this market. So nonetheless, let's zoom in here on the S&P 500, and you will see that recently we've had a 50 and 200 day bearish crossover on the moving averages, which doesn't help the bullish cause at all for the most part. But we had this head and shoulders pattern here that it's been the focus of a lot of blogs out there, and people doubting that it would actually come to fruition because so many people noticed it. So whatever, I don't try to get into those kinds of games. If the pattern's there, it's there, I'm going to take it. So, but in any case, you have your left shoulder here, you have the head here, and then you have your right shoulder here. So you have this neckline here, which represents major support, resistance, depending on what side the price is on. We broke through that. I guess it was probably about a couple of weeks ago, and we started once we started selling off, we started getting these long doji candles here, and they started actually getting me pretty nervous here, to where once we got this particular one right here, I started hedging all my short positions with a very long QQQQ position, and I've basically been holding it through this entire past week, and I will be holding it going into the Monday trading session. So hopefully we don't gap way down, and then I'm saying, darn, why did I do that? But in any case, I know why I did it. It's for managing risk. I don't want to be caught with my pants down, because I was hoping more that we'd sell off rather than knowing that we were going to sell off. So until we get some market action that doesn't look like these candles here, where you start seeing some of these doji candles, for instance, then I'm probably going to start being a little bit leery of holding any kind of long hedge position, and I'll start getting much heavier to the short side. Right now, without the long hedge position, I'm about 46% short with it. Obviously I'm 0%. So hoping on Monday, I was actually hoping on Friday to be able to add a couple new short positions, but the market never gave me that opportunity. So I had to sort of stand on the sidelines there. But Monday might be a little bit different. We might get that opportunities to start adding a few new positions to the short side. So in any case, I had a post on Friday as well about how high do I think this market can go. Fibonacci retracement level is going to be probably around this 61.8% level, is about around this 1090 level here. So if it goes beyond that, then that could leave me scratching my head a little bit here. But I definitely think this area here, where you had this little congestion area breaking through, that's going to be definitely some resistance. And if you break through this, then right, that's going to stink, because it's going to throw a lot of things into question, because possibly you have a bear trap from the past couple months, which none of us bears want to be necessarily caught up in. But for now, though, I mean, I still think that this is all just a short covering, dead cat bounce, whatever you want to call it. If you look at this volume here over these past 3 trading sessions, notice how they just keep getting lower and lower and lower, versus this sell-off here. When you had the sell-off here, the volume was much higher. So, and actually, you might not be able to tell, but it actually increased every day on the sell-off. So, and two, for a long time we were oversold, quite heavily oversold, but we've worked off those conditions pretty good here to where we're about in the middle of the range. Let me look at the NASDAQ chart here, pretty much the same story. The head and shoulders neckline isn't as horizontal as it was per se on the S&P, but nonetheless, the chart is quite similar. Broke back through the neckline, quickly approaching the 200-day moving average. You haven't quite had the bullish crossover, but it's going to happen pretty soon here. Volume also dramatically has been dropping off of the NASDAQ as well, which throws into doubt the legitimacy of this rally in the markets. Let's see, Uncle Russ here, you got the neckline, busted through it, broke back up. The good thing is like in the other indices, you've got lower highs, as in where this mouse pointer is looking at here, and higher lows. So the T2108 is a pretty popular chart. We're in the mid-range of that as well. It basically measures the overbought conditions of the market. We are still we're not oversold anymore. We're in the middle of the range, and typically when we get in the middle of this range, you can see there's a lot of congestion, a lot of back and forth. So that could be what we see in the days and weeks ahead before we actually move back down lower again. It's anyone's guess. Now here's a couple of setups that I like. I had a reader send me this one, and I actually do like the setup quite a bit here. You got a double top here. You got a gap that is yet to be filled, and has already been penetrated a little bit, so ultimately you would think that has to be filled. You got some nasty resistance overhead right where the 50-day moving average is, so a stop loss of $3 or $4 is probably in order here. WTFC, this is when I was wanting to get in yesterday, but it rallied pretty hard, and I'm not gonna get in it and lose money for charity purposes, so I stayed on the sidelines there, and now that it's crossed above the 200 and 50-day moving average, I'm going to have to see this thing sell off some before I jump back in. Slab, another stock that I like. You can see here it's butted up against some resistance here that will prove to be a challenge for the stock in the coming days, especially if we do start selling off now rather than later. The stock doesn't stand a chance if that's the case. But everything's pointing down on this particular stock, so the conditions merit on the markets on Monday. This one will be on the top of my list. Yahoo is a recent short that I've had where I made some decent money off of that, but as you can see, it's made some nasty lows and then it popped back up, but it's not really making any headway. It's stuck in congestion here as well, so that could be another position that I add to the portfolio on Monday. Now for some other positions that I got, and I have to sort of hurry up with this video here because I'm hitting the 10-minute mark, and YouTube doesn't like the videos, I don't think, going over 10 minutes. So in US, this is a short position that's not going very well. I think I got a stop loss at 27.43, so good chance that gets hit on Monday if we keep rallying. QQQ, this is my long position, doing well for me. ESV, the stock, despite the bullish nature of the markets, has been going down some here of late, and based on these two candles here, so I'm quite happy about that. And MindReg Medical is sort of stuck in congestion here, so we'll have to closely watch that. This is Ryan Mallory, and appreciate you listening. Thanks.